Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Friday. You know, it was supposed to be a pretty quiet week, and the markets definitely kind of came through on that. But there was way more movement than we were expecting still, so that was kind of pleasant. It has been an okay week, and yesterday in particular, kind of interesting. So let's come look at where we're at. Hold on a second. New squawk is too loud today. By the way, good morning, Ray, A. Paul, Amir. Okay, so here's the Treasuries. Yesterday, we did kind of reverse and turn higher, but they're kind of under pressure again this morning. So Treasuries still kind of pressured. Last night, Donald Trump touring the Federal Reserve and kind of trying to ambush Chairman Powell, which was really kind of painful to watch, to be honest. Like, it was just really awkward and uncomfortable. I don't know if it was an effective ambush. But anyways, doesn't seem to be affecting anything. S&P 500, they did okay, but it's kind of like meh, meh. Okay, oil trucking along sideways. Gold, well, there was a point where gold looked really, really good, but past two sessions, they've been hammered. And silver still doing really well, considering, even though it's down. Copper coming off of those highs. Japanese yen, okay, Japanese yen, that's very interesting that the Japanese yen, I don't know, maybe it's just the scaling. It seems like the yen is down more, yeah, than the treasuries. So, interesting. And then Bitcoin, Bitcoin taking a little bit of a tumble and falling out the bottom of that range. That's a little suspicious, to be honest with you. Like, it's too clean. It's just a little bit too perfect. I'm super suspicious. All the TA guys are going to say, false breakout, go higher, right? Totally. I'm real suspicious of that. Okay, well, anyways. So, and by the way, I apologize for being extra late today. I don't know. I'm ruminating a little bit, and also there was we're having power outages, so weird things happening in my house because of that. So I'm not even done eating. It's really weird to me. Okay, Sam Altman says, world wants 1,000 times more software, so programmer salaries are skyrocketing. It really is weird to me how all of a sudden Sam Altman is kind of starting to say this stuff. And I think some people think that it's self-serving, but maybe as we've gone down the line, they're just kind of understanding better how it works. Or maybe Sam has been watching this stream. Hi, Sam. I appreciate it. Okay, so Nintendo says Mario and Princess Peach are just good friends who help each other out whenever they can. Now, I really think it is the case that Mario is really into Peach and Peach is kind of non-committal. Like if you've played the what's the Nintendo Switch Mario? The one with the hat? I can't even remember the name of it. Anyways, if you played that one, you kind of start to get this idea that, like, actually, maybe Princess Peach isn't it. And there's this other girl that's the mayor of the city. Seems like she kind of likes Mario. And maybe they hook up. Anyways, I should eat. Let me eat. AO asks, any trades? Nope. In fact, you know what? I tell you what. Well, no. We want to leave it on to collect data, but if my robot takes a trade, I'm gonna be like, I'm gonna hate it. I think today probably a really terrible setup for trades. You've got a no news Friday on a no news week, the week before a Federal Reserve meeting, which is going to have increased interest because Donald Trump has basically been trying strong arm tactics with the Federal Reserve, right? So, especially here in the Treasuries, I really don't think we're going to get good trades. Let's see here. I asked GPT to convert the implied volatility on ZN for today based on the overnight open into a projected range, and it capped out at 110.16 as a low and 8.5 as a high. Really? That is... Oh, actually 111.08 is actually really high. That seems... I'm not sure GPT is right about that. That seems like way too large of a range. 110.16 half. Take the option open interest and come with close. What do you mean? I mean, I could... The implied volatility is 5.45. What? I don't know, man. I kind of feel like that if there was a play to make today, it would be to sell options, right? To basically buy condors, right? Is this... So, did you pass the implied volatility into ChatGPT, or did it search for it itself? So that would be the first thing. You gave it the values. Okay, so then it's probably okay. Although... Okay, let's try it. We come to trading view. We add my volatility projected range. Let's get rid of these other charts. And then we change the settings on the input to... Actually, it's not... What is it? It's called move, right? But I don't know what it's... PVC? PVC. Okay, so it won't give me a value until the stock market open? Okay. That's not going to work very well, is it? Oh, it's giving me a line because it's not actually pulling it up. Let's try that again. TVC. No, we call it move index. Or maybe I can do it on the top value one. Symbol TVC move. There we go. Of course, the number that that's getting is way too big. Session spec. So let's change that. Okay. Inputs. I can't change the number? I must need to update it. But what made you think to ask ChatGPT that today? Kind of weird. And I thought that I had the ability to change the number on here. Well, just out of boredom. So if you ask ChatGPT to do an exact calculation, it's usually pretty good about it. But I tell you what, man, I feel like it's just so interesting the way that the ChatGPT thing has come along, because the average person thinks of it as just like a magical text box. I can just put whatever the F I want into it, and it will just give me these wonderful answers back out. And I think that by and large, we are often missing where some of its best use cases are. Like reading an article and summarizing the key takeaways, or trying to quantify information from that article. That's something that ChatGPT is really effective at. That's something that ChatGPT is really effective at. And so you can kind of, some of these things that we try and do that can't really be systematized because the data isn't there, you could potentially scrape it and convert it into a format that it is actually usable by your algorithms using ChatGPT. So that's like one of the strongest use cases, I think. You know, but what people do instead is they pass it a picture, and they try and have ChatGPT set up a trade plan based on the picture of the chart that they gave it, which is ridiculously stupid, but that's what people are doing. Put call ratio suggests selling. Yeah, I guess I'm just stuck at, I think today is probably a terrible day for trading. But let's see. I'm going to be dead wrong. All those trades that I kind of poo-pooed yesterday that the algorithm took were really good, so Oh, I'm muted. So based on reading that, I think that means that the most options would expire worthless between 16 and 24. Like where we're at right now is a place where most of those options expire worthless. Pro streamers always mute themselves when answering. I was muting myself because I gotta eat. I've still got to eat these muffins. Let me pull it up again. Oh, right here it is. So for puts, right? We're essentially right now at 110.75. Okay. So all of these guys above here are making money, right? All these guys below here would lose. And the most is at 110. Okay, and then on the call side, again, if all of these guys that were below here make money and all these guys are losing. So again, you get like right where we're at is kind of the sweet spot for the most options expiring worthless. Muffins aren't a hell. Well, I already ate the eggs. And these are bran muffins. You got to get the bran in you guys, because if you don't, then you won't have enough chromium and then you get insulin resistance. You're right. My time management is terrible. It's really more my perception of time. I will wake up, get in the shower, and eat. And while I'm in the shower and while I'm eating, I'll start thinking about things and completely lose track of time and end up getting ready much slower than I should. And then on top of that, today there was a power outage overnight, so I was kind of fixing clocks and things like that. And yeah, I'm ruminating a little bit because the company that I've been contracting for, I feel like it has a lot of room to grow, but I'm concerned that they're going to have a hard time attracting the talent. And really what they need to do is they need to offer stock so that they can offer stock as compensation. And then all of the employees can become millionaires. So I was thinking about that. Actually, I should look that up. I'm wondering, these guys basically do like smart home stuff for schools. So like, what is best smart home stocks? Okay, yeah, this is a good comparison. Invitation Homes sales year over year was 2.71. So they get 2 billion in sales. Alarm.com. ALRM. Okay, they're similar. They're 3 billion. Honeywell spinoff, huh? Resi. They are 7 billion. ADT. ADT makes 5 billion. Do you think there's still an edge in the order book slash flow imbalance at the micro level? Well, so the thing that you got to understand, dude Ron, is that the inefficiencies in the market that are visible from the order flow are largely results of the market microstructure, which is to say that the rules of the game, the way that a limit order book works, kind of results in certain mathematical properties that are visible in these aberrations in the order flow. It's caused by the rules of the game. So those aberrations will always be there. That doesn't necessarily mean that you will be the one making money off of them, right? But there will always be those behaviors and the opportunity for someone to make money from them. And it usually comes down to whoever's the fastest, right? So in that framework, order flow, a lot of the order flow, at least, like the well-known things, I wouldn't consider them edge as much as it is base, which is to say, they don't give you an explicit advantage, but you don't want to be trading against them. So it's still information that you want to be looking at and factoring into your trading. More broadly, order flow is really necessary to understand what is really actually happening in an instrument. So that kind of makes order flow, at least on a short-term basis, kind of like a prerequisite. Like, you really got to be watching that and understanding what's going on in the order flow for the other things to really even be practical. Right? So that means, yes, you should learn order flow, but just don't assume that that's going to be all it's going to take you to learn order flow and then you're going to be a profitable trader. Probably not. Order flow can get you to break even. What's going to get you over the line is your understanding of the market, understanding of other participants, and being able to predict what they're going to do before they do it. That's where true edge comes from. At least in what the time frame and game that we're playing. Okay. We've all kind of been trained to be obsessed about statistical inefficiencies and technical analysis because there was so much success in the CTA space in the 70s and 80s. But they were playing on a different time frame. So if you want to play that game, you should do a portfolio strategy. And there's a lot of complications in backtesting and doing that stuff, but you can do it. And there's plenty of edge to be had there. Now, another thing that I would say is, I'm talking about the empirically proven behaviors of order flow. That doesn't mean that there are not other behaviors about order flow that are not well known or have not been discovered yet that you can discover. The thing is there is a lot of data there, and there is a lot of issues that make, okay. Okay, Donald Trump is speaking, and he says that he got the impression from Powell yesterday that he is ready to start cutting rates. I don't think that that means that they're going to cut next week, but I think there's a very high probability that they cut in September. So maybe Powell told him as such. I don't know. But the market moved on that. That kind of seems like a non-headline to me, a non-story to me. So probably you'll see a bunch of robots get triggered, and then we kind of resort back to what we were doing. What was I saying? Yeah, there's a lot of things. So like historical data on market depth isn't really available, right? And then you're looking at the market depth at like literally every price. So there's so many different ways that you can analyze this data and things like that. So there's probably still plenty of opportunities for you to find an edge in order flow that has not been exploited. And then the last thing that I will say is from looking at this data on stocks, if you go and you get NASDAQ total view data, which you can get through DXFeed and others, and is available for 2 retail traders for like as low as $97 a month, I think. From watching that data myself, I believe that there is a large amount of untapped potential in stocks. That the kind of the order flow oddities that are there in futures are, for the most part, completely arbitraged away, but that is not the case in stocks. So it could be very valuable to you in stocks. Powell looked like a child being scolded. So I want to go into something that we've discussed a little bit before, but I think it's always useful to go back over again for new people. I have found that left-wing, liberal-minded people and some conservatives, you know, that just really, really don't like Donald Trump have a very, very difficult time actually predicting what he's going to do and being able to trade around him. So you'll go online and you'll find a lot of people just, you know, like the Wall Street Bets subreddits, like especially Wall Street Bets Elite is like practically unreadable now, because all it is people complaining about whatever the latest thing that Donald Trump said and not actually talking about trading or anything like that. Yeah, it's going to get triggered long here, isn't it? Okay, well, I don't think this trade is going to work out very well, but we're going to let it do its thing, okay? So that we have the data. Anyways, so I think that I can give you a framework to explain Donald Trump's behavior that Trump haters will both understand and will be more effective for you at predicting what Orange Man is going to do. Okay? Reddit is full of Orange Man bad types. Yeah. It really is like a syndrome. Like some people, they get so upset and triggered by him that they just can't see clearly. So here's how I would approach it, because I think that the typical approach for like explaining Donald Trump's behavior is, well, he's a narcissist. That's what they say. He's a narcissist. He has a mental disorder. He's crazy. And number one, I'm not entirely convinced that that's true. I actually kind of think from a psychology perspective that he's probably more ADHD than he is narcissist. But then also, if he's an unhinged narcissist, that kind of still leaves you at he's unpredictable, right? So how does that help your trading? Because again, I find these people have a very, very difficult time trading around it, and that's why they're just going on Reddit and they're just raging about it, right? So here is the framework that I would use. Okay. Think of Donald Trump as a wannabe mobster. That's the way that I would think about it. So, you know, Donald Trump, a lot of what he learned came from a lawyer who was kind of like a mob lawyer, as I understand it, right? Like, he learned these tactics from the mob, I think. Now, I'm not going to say that it's a perfect model or that it's completely true, but it is a useful model. So just remember that thing, right? All models are wrong, but some are useful. So I'm not saying that this is completely the truth that he wants to be a mobster, like really deep down in his head. If we could read his mind, that's what he would be thinking. That's a good chance that maybe that is how he thinks. But I'm merely saying that this theory is effective at predicting how he will respond, how he will behave. And one of the things that I find interesting about the mob is that the mob is really just about unbridled power. How can I make more money and control more things? And I'm going to do whatever I can. And I think that the mob has, because of that, stumbled onto many curious tactics that take advantage of complexity. So they will go into a situation and do things that seem completely unconventional. But when you actually go down and look into the data, you actually find that they are very effective. And so that's what I think Donald Trump is doing. And I'm not necessarily saying that he, that he, for those that are pro-Trump, I'm not necessarily saying Donald Trump is like, has weak moral character and so that's why he uses mob tactics. I think that he knows that these kinds of tactics can be used against him, that people in power, that they'll use them. And so since they're possible and available under this system, he's going to use them. That's kind of been his take on it. That part I'm pretty sure of, because they've said things to that effect. They're basically like, Republicans don't know how to win anymore. Well, it's because Republicans have this really strict view about the way that the world is supposed to work and the way that democracy is supposed to work, that I think conflicts sometimes with what is actually effective, right? And one of the things that they do 100% is, if there's somebody standing in their way, they're going to pressure them. They were just saying, like, the first thing I heard on the News Squawk when I sat down was them saying, no, this is not a campaign to strong arm Jerome Powell into cutting rates. But I think it is. I think 100% is. That nobody ever talked about these overruns with the Federal Reserve. Nobody knew or cared about it until Donald Trump started to get pissed off about the rates not changing. It's 100%. This wouldn't, if Jerome Powell had been cutting rates every Federal Reserve meeting since Donald Trump been elected, nobody would be talking about this. Nobody would be talking about this. And then what happens? He goes to tour the Federal Reserve to see the renovations that they're making and why they're necessary. And he says, oh, there was a press release just out that shows that the overrun was actually $5.1 billion. Well, how did they do that? They included some other project that was kind of unrelated into it and put out a press release so that they could talk about it while the press was there when they were touring the building. It was an ambush. The whole thing was an ambush. And Jerome Powell, very, very, very uncomfortable. The whole thing was extremely awkward. I don't think that the ambush actually worked. But that's because largely there's not a whole lot you can do other than fire the Federal Reserve chairman, which I think they probably could do, but would be kind of pointless. So the reality is that I think that it is a strong arm campaign that's not going to work, and the Federal Reserve is probably going to start cutting in September anyways. Okay, let's read some comments. Well, of course, same thing with conspiracy theories. People need someone or something to blame for all the problems in their life. It's always the fault of some higher power. Yes. Conspiracy theories are largely a defense mechanism for people that feel that they don't have power. We're all prone to it. That's basically, that's your mind. That's the executive functions of your mind when it realizes that it doesn't have any power. And you're functioning in a situation where you don't have all of the information, it makes the information up. It tries to come up with plausible explanations. Like Trump says, tariff letters going out by Friday. He's still talking, so we might still see some stuff here. Did you count? We haven't talked about Epstein today. We talked about it yesterday. You know, actually, it's interesting. This is the first day where in like a week where there hasn't been some new narrative or story or something about the Epstein list to talk about. That's interesting. Nah. So what were you meaning with look at what happened in the 2 years? Is that a successful test? I thought I had a 2-year chart up somewhere, but I'm not finding it. Oh, no, yeah, I do. It's right here. ZT. I don't know. I think that jump was just Trump. The projected range low was 103.18. Oh, okay. Yeah, maybe. Yeah, maybe. Yeah, okay. I think the issue with that trade. So I guess in this situation, if it was really, I didn't realize that they were so close to it. Because you only mentioned the ZN one, and that was too far away, right? We started at 6:30. They came down to it. I don't know. I think in this situation, when we expect the market to be really, really, you mentioned both. I wasn't paying attention. I'm sorry. In this situation where we really expect it to be a bad trading day, and it's on the edge of that range, yeah, it probably is an okay trade. I think there's always a risk that they kind of push it a little bit to trigger everybody, you know? But not this time. Like I'm willing to say in this situation, yeah, that was a pretty good trade. But if you were to systematize that and trade it every time without the additional context that we're able to add, it might not work. Because the situations where the range does get broken are going to be like the biggest trend days, and you'll just get slaughtered, right? But we're in a situation where we know that a trend day is extremely, extremely unlikely. So then it becomes a good trade. $103.196 is the expected high. Really? You all get slaughtered. Well, it's not just that. It's like on a risk-adjusted basis, it tends to come out break even, right? So it's kind of, well, we've kind of got it backwards, right? So like you could say, okay, when this fails, it fails really hard, but then I just put a stop there, right? And then I should be good. But what tends to happen is, yeah, there's the days where it's just a trend day, but then there's also days where they just kind of flirt around with that line and they move it around just enough for it to hit your stop, right? So usually in everything that I've ever back tested, that doesn't really help. But where it does help on the other side, So if you have a strategy where it's something that should go, as soon as you get in it, it should go, and it will go really, really far. It will trend really, really far for you. Then having a stop, that's a relatively close stop, that says, okay, this isn't actually happening and I'm going to get out, works really, really, really well. But essentially, it's all about that distribution, right? You want to create a distribution that's like the ideal distribution. This is a Gaussian distribution. The unicorn distribution would be this. I don't think that this trade exists. You win most of the time, and sometimes when you win really, really big, and your losers are relatively small. This is the unicorn. The only way that you can get the unicorn is informed trading. Or maybe we should even say insider trading. You really know something and it's going to move. Every once in a while it doesn't work out and it screws you over, but most of the time you win, and sometimes you win really, really big. This is the unicorn distribution. But what happens instead most of the time is so if we come and look at it, is on a mean reversion strategy, you're going to win most of the time, and you're going to get this. You're going to get this far right tail, right? So then we say, oh, well, that's no problem. We'll just cut the tail off, right? And what happens to the distribution is kind of moves this hump over. So now you get this. The hump is a little bit further over, and the tail is not as long, but it's still long. So it doesn't actually help you. You see? But we know what's going to happen. We know that it's No News Friday. Then we can change it like this. We can change it to, right, where really we win almost all the time. And then when you put your stop on there, it moves it over, but you've still got area, because this area right here is how much you make, and this area over here is how much you lose. Okay. How can we connect news, events, and economic stuff to order flow? I mean, how is it possible to say this order flow is due to that or this event, and how do you integrate this stuff into your trading? Good question. It's probably the best question. So first thing is timing, right? So if I see, I'm looking at the chart, and all of a sudden at one point I can see that the cumulative delta clearly changes, like what we're seeing here in ZT. Okay, order flow was doing some interesting things, and then all of a sudden right here at this point, changed. What changed? Donald Trump said that he thinks that Powell is ready to start cutting rates. Okay, so this flow is pretty much extremely likely. I mean, you can never know for sure, I guess, but I think we can pretty well assume at this point that this flow was driven primarily from people getting triggered along from Donald Trump's comments. Right? Now, sometimes it's more subtle things. And so we kind of have to play detective. Kind of have to say, okay, what are the possible flows that we might see here today? And then what is the data that we actually got? And then we're going to start looking for things that might possibly confirm or deny those different theories. So one of the things that will help you confirm your theories is that there are news reporters that talk to the desks and ask the desks why people have been trading and what's going on. And then they'll say, oh yeah, there was a ton of flow that came through because of they were concerned about X. Right? So that's one thing, is after the fact you can kind of attribute that flow to that. And you might say, well, that's not useful to me now because it already happened. Yes, but it could potentially help you predict future events. And you still have like open positions because of that. So that it might also tell you some things about the current state of the market for the next move. Right? Another thing is you can look at correlated instruments. So sometimes it's not the 10-year treasury that's moving, it's the Japanese yen that's moving, and we're just moving in correlation to them. And vice versa, right? Or you can look at, okay, is gold moving? Is Bitcoin moving? Are the equities moving? To kind of sort out these different trades where you can see, okay, the S&P 500 is selling off and the 10-year treasury is buying, so it's a flight to safety move, and that's what the order flow is, right? So between all of those things, I find that about 90% of the time we can determine pretty well what individual flows were. And that's kind of the whole game, is just move by move, trying to see what actually drove that flow. That was pretty cool for literally a whim out of boredom. Well, it's pretty cool that it actually hit the... So part of the reason I dismissed it, I should have looked at the ZT, was because I thought it was so far away. Thought there's no way that that's even going to come into relevance. So that's interesting. Maybe because the range has been so tight lately. You know? Yeah, the ZN one is really wide, but the IV is also wide. I mean, I would be really careful about trying to do this next week when we got a Federal Reserve meeting and the trade deal deadline is coming up and the implied volatility is really, really high, right? Yeah. Yeah, I wouldn't trade events like that anyways, yeah. But like maybe the day before it. The day before it might be like, oh well. Did ChatGPT tell you, or what did you provide it as the volatility? Did you give it the move index then? How did you or in what form was the implied volatility given? Okay, you gave it the implied volatility based on the options, the overnight open, and the session open. Gotcha. Okay. Because if it's based on the move index, right, then we have our thing and we can backtest that. And I don't think that I've ever done a formal backtest on that because I didn't have the VIX data when it mattered. Yeah. But the reason I'm thinking, yeah, you could probably extrapolate something similar with the move index, yeah. And I'm a little bit disappointed. I thought that my trading view indicator was a little bit more flexible than that. But it would be interesting to go in and into ZT and say every time that you're getting outside of the range, you take the mean reversion trade. And I would be more interested in how often it actually gets triggered, because now I'm starting to wonder, does that play on that line in ZT more often than I think? Because that's, I think, another problem with the trade from like a systematic point of view, is that it might not be common enough to really get good data from it. Like, it's not something that happens every day, is it? Well, maybe in ZT, maybe it does happen almost every day. But I'm going to bet that it's maybe something that maybe happens once a week. So now you've got like a tenth of the data. Well, I'm not saying don't bother with it. I'm certainly not saying don't bother, because I wrote the volatility projected range indicator precisely because this was something that we knew mattered and could predict future order flows, right? So I'm not saying don't bother. I'm more concerned with somebody new coming in and hearing you talk about it and over extrapolating what you're getting, right? You have ideas and sometimes I actually trade them. Yeah, I haven't been taking as much risk as I should have. My hit rate on my discretionary trading has actually been insanely good rate lately, but it's because I'm so selective. You traded the cost basis for a while too? Wait, do you not still do it? I don't know. I'm still, like, the cost basis one is really hard. Cost basis one is really hard. The market order imbalance, I think, is amazing. We just got to figure out the regime switching thing on that thing, and that, like, the imbalance is something that I think we can systematize. I still use it, but I'm a bit more selective about taking it into consideration. Yeah. So here's my issue with the inventory cost basis. I kind of have like I don't know. This is going to go into a big long rant. Oh, let me finish this muffin. Okay, so here's the bigger thing about it, and why I kind of have mixed feelings about the inventory cost basis. So first of all, cost basis is a very, very sophisticated calculation. The code for it is very complicated code. The algorithm is a very complicated algorithm, and I'm really, really proud of that code. And I do believe that it is showing us something that you can't normally see that is really significant. You can essentially see like where the break even and loss points are for market makers that under various scenarios. And the market absolutely seems to respond to these levels. When I've back tested it, I haven't been able to find a way to make that turn that market response to those levels into a profitable systematized strategy. But I do believe that it's not just random. I do believe that there is a real thing there. What I would really, really like to do is do a study where like we have the order flow from an options market maker and we see where their actual cost basis and break-even points are, and compare them to our indicator and see how accurate or effective the indicator actually is. See how far off it is. So that would be really, really interesting. And I think that I push it a lot and talk about it a lot because retail traders right now are really, really interested, almost obsessed, some of these people, of this idea that the market makers are in control and that if you know what the market maker is going to do, then you'll always win. The problem is that the market maker really doesn't matter. The market maker really doesn't matter in the situations where there's really money to be made. That's the problem with it. Is that regardless of where the market maker's position is and what they're doing, the thing that's really going to predict where things are going is the future market orders. So it doesn't matter if we're at a stop out line or a break even line or things like that. That's like if we're having some sort of a move where there's nothing going on, but like there's trap traders and things like that. So maybe like on a day like this, us coming into that cost basis line at 27 right now could be a good reason to sell it. Again, backtesting this, I've had a hard time making this trade work, but doing it live, we've done pretty okay with it. It's another one of those things where I don't know if the risk reward on it is really works, but this is probably exactly what Uzi was talking about, where it's like, look, we're at the cost basis line. We know that it's going to be a relatively quiet day. Probably they might go a little bit beyond it. Who knows? But probably it's going to turn back down and mean revert. This is the most likely scenario. And since we know it's a no news Friday, on a no news week, the week before a Federal Reserve meeting, that makes the trade an even better trade setup. I don't know. If this had happened an hour ago, maybe I would have tried to trade it. But now I'm like, well, I only got 20 minutes. Right? So that's why I feel like I have a complicated relationship with the inventory cost basis, because it's something that I know the trading community will be interested in, but it's not the thing that I am most interested in. What I'm most interested in? News and things that will tell me that there's this huge swarm of market orders coming. That's what I'm most interested in. Right. And then once we do have that, how do I manage that best? What's the best way to get in when that's happening? What's the best way once it's happened and you see it and you've made some money to get the optimal exit? And on those things, and so when I think another thing that goes on is you guys will talk about those things, And I'm kind of already like, yeah, but the thing that's really going to be a game changer for us is if we could do this or that, right? Well, it's probably wrong thinking on my part because every teeny tiny little thing helps, right? I think that the volatility and like the volatility projected range is something that I would really, really like to incorporate into my trading more. And I would if I had the data, you know? Well, I guess we kind of do have the data through TradingView. I need to go and take another look at that indicator. Maybe after I make the cost basis for TradingView, I can go and take another look at that because I really thought that I could change the ratio. Basically, the ratio that I've got works for Treasuries, but it's not working for Move. Actually, let's pull that back over again. So here, another thought for you, Uzi. Just use ATR. Just do the same calculation with ATR. It's going to be different, but similar. And you're going to probably find some situations where ATR works better than volatility range and vice versa. Or we could really go crazy with it and we could start doing things like Garch and so forth, right? Trading. Oh, you have an indicator for it? You don't trade it, but I do peek at it and see. That's good. Oh, maybe that's why. Oh, wait. 1 minute. 1 hour? Wait, what's this? Oh, I see. Crash. Maybe it's not working because it just doesn't give us very much move data. Bond volatility. VXTLT. Okay, let's just try it. Okay. Well, now that's interesting because the values I'm getting are completely different. When did you have it reset? The beginning of the regular session? Oh, I didn't change this. This should be ZT now. Futures. Why are you being so slow today? Oh, no, see, now it's too far. So that's based on the regular session. Yeah. Well, I wonder why that still doesn't work. I'd have to figure out, even if I can see where the problem is. So there's the 16, it's not using a variable. So all I would need to do is make that into well, I edit it, turn that into a variable. But then we'd have to figure out what the correct factor is. By the way, I think this is actually a perfect example of what I was talking about. So I said maybe the trade is short 27. Well, the exit would be 25. So is 4 ticks worth it? I guess I shouldn't snub my nose at it. That's probably a pretty good play for a day like today. Worked well. They didn't press the trade. They didn't pressure it or take their time either. It just, if we hadn't have taken it when I was talking about it, you wouldn't have gotten it. That's interesting. Oh, I missed this comment. What's your go-to source for market news? Honestly, probably Zero Hedge. So Zero Hedge will post these stories that are basically leaking analysis from the major Wall Street firms, the major Wall Street research outfits. And so that kind of makes Zero Hedge an invaluable news source, even though they post a lot of BS. They really post a lot, and I mean a lot of BS. So I've noticed it hits perfect sometimes, not commonly though by any means. Yeah, so like, I think that we could say the effectiveness of a line is the amount of times that it bounces directly off of it or doesn't there's scenarios, right? So there's like it doesn't get to it, it bounces exactly off of it, or it goes a little bit through it and it bounces back, right? And then there are the times where it ignores it, right? So if you were to make a stat that says it bounces off of it to the tick, I don't think that would be a good enough stat. I think that it would need to factor these things in some sort of a mathematical way. So I am not sophisticated enough mathematically to figure this out. But it seems to me that we should be able to make a score that says how effective that line is at predicting either mean reversion or acceleration. Mean reversion or trend, let's say. And I'm going to bet that if we were to represent that in terms of like a percentage, right? So the percentage times that it's effective, right? And I think that retail traders think that these lines are like, 0.6. When it gets there, it bounces off of it 60% of the time. And it's probably actually something more like 0.03 or something like that. It's probably like this really tiny number, right? But I'm going to bet that our inventory cost basis has a higher score than most of the things that retail traders are looking at. Like floor pivots. I bet you that this line has higher predictive power than floor pivots. And it's probably somewhere in the same range as VWAP and gamma levels. Probably gamma levels is probably a step above. Gamma levels is probably a step above this. If we could make a score. So this is kind of why I've always kind of been like, well, I don't know, what's the value of a line? Like, surely we could express this mathematically, but once you start to express it mathematically, you probably discover that it's probably not worth paying that much attention to. Doesn't mean that we can't make it sometimes. That's the other thing. It's like, doesn't mean that it doesn't work sometimes and that we can't, sort out the times where it really, really matters. But the other thing is how much of your focus are you losing on the trades that are really, really going to go for you and that you really, really want to get, right? Yeah, average retail trader believes that fair value gaps are the GOAT. That's because they don't actually have an indicator for it. We're going to make a chart. Indicators. Speculator Seth. I think that it's going to be SPS FVV or something like that. It's not in free, is it? Oh, alpha. That's why. Add it to the chart. So, a fair value gap is basically a case of confirmation bias. you're coming through and you're seeing, okay, here was a fair value gap, and then that really mattered. And then look, they came and they took it back out later. Cool, they totally work. And the reality is that there was like 20 other fair value gaps that you don't see when they draw those charts. If you took these guys that are like making content with this and showing charts, right, and put my indicator on it that showed every fair value gap that happened, what they're saying would seem so ridiculous at that point. Because everybody would be like, well, why that fair value gap and not that one? Why this fair value gap and not this one that they never got to? Huh? Oh, yeah, you're right. NinjaTrader did add a new one in their release. But it's not as good as mine. I'm telling you, NinjaTrader, if you're willing to let somebody work remote, I would totally work for you, and I would give you the best stuff. I have better, straight up better bar charts, faster bar charts, versions of your indicator. They're just straight up better, and they're not like we added more features. No, they just like the fundamental idea behind them are better than the way that you did it. I got so much good stuff, and you can just, in fact, I'll do you one better, NinjaTrader. You can just take my code and put it into NinjaTrader. I don't care. It's okay. You go and you like this fair value gap one, go and put it into your fair value gap indicator and make it a really cool fair value gap indicator. Yeah. There's so many different things. I don't know. So I was watching Squid Game the other day. And so if I'm gonna try and not spoil Squid Game season 3 for you guys, but I think that the main gist of it is that they're trying to say that elites and countries treat people like cattle. They don't really care about us as people, and they just treat us as cattle, things to make money for them. And as I'm watching that, I'm just thinking, because the thing that I like about Squid Game is that it shows that a lot of the things about the way that society turns out and the way that the economy works is based on math, and whether it's was designed to be callous or be that way is up for debate, I guess. I kind of feel that it's was unintentional. But it's definitely like a thing. And I think that the point that Squid Game is trying to make is that people aren't bad, but that the system turns them bad. And when I come in and I look at things like the fair value gap, I keep coming to this place that's like, well, it definitely doesn't work. I think that retail traders should be told that, and we can tell them what doesn't work to help our channel out and everything. But at the end of the day, I think that the whole thing is set up for people to want to believe those sorts of things. So I'm kind of wasting my time. Trying to disprove these things for retail traders. That makes sense. I kind of felt like as I was explaining that it was a little bit all over the place and how those two ideas related to each other, but so since I started the day job is I think really where I started feeling like this, where it was like, okay, I can come in and do my thing. There's probably not a whole lot I can do right now to really make the channel more effective and to really get my message out more. And most people are going to ignore it. So I've got to move back to doing my thing, building stuff with you guys here on the stream, and not caring what everybody else is doing. You know? You can get a job with Sierra if you eat mushrooms every... Do they... You know, I did get things working in Sierra charts, and I did gain an appreciation for how Sierra charts was developed, but I still don't like it, to be honest with you. Their programmers aren't incompetent. A lot of it is just a factor of what it was written in, and probably the experience that somebody that would have that much C++ knowledge, you know, the types of things that they would try and do, you know? But I still want to make my own platform, man. Still really want to make my own platform. I don't know. Maybe if the LLMs were better at writing REST code or something. I'll have some time. We get into it. I really want to do the part where we connecting Python and Rust together. If I get that part working, and then we could like start running with it, you know? And maybe start with DX feed data. Yeah. Yeah, what time is it? It is 8:03. It's time for me to go. So I knew, like, when I started this, I knew that it was time to go, but I was going to finish it. Okay, guys. Stay excellent, team. I'll see you Monday.